Greetings. Welcome to my weekend market recap, 3rd June 2023. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. During the weekend, I was busy releasing the latest versions of Q Global and Finder as well as Q Elite. I showed them a bit in earlier market roundups. From now onwards, I am going to use these latest versions. They are available for download. I'll share some more detail on how to download and install in today's session. Before that, let's go through the disclaimer. This demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems in my trading. All the Q components run on Metastock platform and the technical component runs on TradeStation. On TradeStation, the technical analysis component is called Q Elite. I released the latest version of that today. On Metastock, the technical analysis component is Q Global. I released the latest version of Q Global also today. Now, before starting the market roundup, let's spend a few minutes on the systems, the latest updates, how to install them. On our homepage superiorprofit.co, if you go to subscribe and click on download, then you will go to your download page. If you are a Q Global subscriber, then you may download Q Global from here. And some of you also have the additional momentum signals. Earlier, that used to be called Q Global 2. Now it has been renamed as Q Global Plus. And if you are having Q Global Plus, the Q Global Plus momentum signals, you need to download only this. You do not need to download Q Global. And if you don't have the momentum signals, you will probably not see Q Global Plus on your download page. You may then download only Q Global. So again, if you see Q Global Plus, download that. If not, just download Q Global. Similarly, if you are having Q Elite plus the momentum signals, you will see Q Elite Plus on your download page. You may download and install only that one. You don't need to install Q Elite. And if you are not having the momentum signals, you will see only Q Elite on your download page and you may download and install that. Now this has some significant enhancements. Some under the hood, you will not see the impact on the charts or on Finder. Some changes are there on the external view also. In any case, because the changes are significant, you may remove the older components before installing the latest versions. How to install and also remove the older components before that? All the detail are already on the forum page. So again, if you go to superiorprofit.co, click forum, you will come to the forum page. Stock ideas are shared by me under this category, stock ideas. if you scroll down, you will see the install category. Click on the install category and you will find several subcategories, one for Q Global and Finder and one for Q Elite. Let's go to Q Global and Finder. Here you will find the steps for downloading and installing Q Global Finder. And as I mentioned, before installing the latest version, you may remove the older components. For that, the steps are mentioned here. Removing older components before installing a new version of Q Global. Similarly, if we go back to the Q Elite install category, then you will see the steps for how to download and install Q Elite. And before installing that, you may follow the steps here, removing older components before installing a new version of Q Elite on TraceStation 10. If you have any queries on download and install, or if you need me to do that remotely, please contact me using email and I'll be happy to help you with that. Let's close this. Let's now continue with the live market analysis, starting with a look at the global markets. First, a look at Australia's all ordinaries. In the weekly, all ordinaries is inside a triangle pattern. This week's candle is very indecisive. So I'm going to wait for price to break out of the triangle pattern in weekly, and whichever direction it breaks out, I will decide my preferred trading direction to be that. Right now I will avoid taking any trades in the Australian market. Topics: Japanese market. This was very bullish. You can see for so many weeks the backdrop color is remaining bullish for 8 weeks in a row. In the daily also it is going up. On Friday it broke above the trend line resistance with a bullish flow and also with a possible flow trend following long setup. I'll not like to buy the Topix index itself, but looking at the bullishness in the weekly and the breakout in daily, I will not mind looking at individual fundamentally strong stocks that are giving low risk buy point. Topix is in an uptrend and preferred trading direction is long. Next, China's CSI 300 index. This was in a downtrend and that is continuing. In previous several roundups, I mentioned that there were and there still is a cluster of indecisions at the low in weekly, and now I can see a cluster of indecision at the low in the daily also. So though it is in a downtrend, looking at the indecisions in weekly and now also in daily, I'll avoid taking new short trades. Also a bullish headwind signal, not setup, signal came on Thursday, and Friday the candle color turned bullish with a bull release signal. Though there is no long setup, there is one trend line resistance, then another one, then another one. It's not going to be easy to take long trades in the China market anytime soon, looking at the series of trend line resistance one after another. But I'll avoid taking new short trades for the time being. Direction downtrending, no preferred trading direction. Next, India's Nifty 50 index. Here also the weekly is going up. The backdrop color is bullish for 9 straight weeks. 9 straight weeks. That's very bullish. Daily is in an uptrend, has only trend line support, no trend line resistance. It is going up. I am little bit reluctant to take new long trades. One reason is the bearish headwind that came at the price level here in weekly, which created a watermark, and it is approaching that watermark level. There is still some distance to go before it hits the watermark, but looking at the bearish headwind and the nearby watermark, I am reluctant to take new long trades in the Indian market, which is uptrending. But I am not going to buy new long positions now. Next, UK's FTSE index. FTSE index is also inside a triangle pattern in both weekly and daily. However, it is not in a triangle similar to the Australian market. Here the triangle is quite wide, and on Thursday it came to the lower edge of the triangle and price went up with a bull release signal. So on Thursday we could start to look for buying opportunities because price was going up from both weekly and daily trend line supports. The supports work very well. So in a sideways market, we like to buy at the lower edge and short at the upper edge. This time it came to the lower edge and went up with a bull release. That was the low risk entry point for fundamentally strong stocks that were also giving low risk buy setups on Thursday. I'll not like to buy on Friday, but Thursday was the buying day for FTSE market. So global markets are showing a mixed picture. Some are in a range, two of them, UK market and Australian market. One is in a downtrend, Chinese market, and two are in an uptrend, that is India market and Japanese market. Mixed picture. What about the USA market? USA market turned quite bullish this week. Let's start with a look at the market ETFs first, the external view. For the global markets, I was using Q Global on Metastock because Metastock allows me to look at not only USA market but also global markets. Whereas TradeStation allows only instruments traded in the USA market. So for USA market ETFs, let's use Q Elite on TradeStation. SPY, this broke out of the weekly watermark resistance and daily was already in an uptrend. It broke out of this watermark resistance also. Cleared the 420 price range, closed at almost 428. Weekly, daily, both are very bullish. There is no question of that. Now, is it getting too extended? That question is answered from the jump thrust indicators, the pair of indicators here. They are approaching the too extended level. They are now green. Once it turns cyan, both of them, then it is too extended and that may be the time to be cautious. But now it is still not cyan for jump thrust. It may hit the previous top here in the weekly, go to this watermark resistance. There is some distance to go for SPY to reach there. So SPY is bullish. I will not buy SPY itself, but SPY is bullish. And QQQ, that was the strongest of the market ETFs, that is continuing. We just saw that SPY could not breach the previous weekly watermark level, the previous high. Let's go back to SPY. This is August 2022. The August 22 high is not breached yet by SPY. But for QQQ, this was the August 22 high that is very comfortably breached by QQQ. Very strong, strong in both weekly and daily, but too extended for swing trading purposes, far above the upper boundary level. Upper boundary was crossed by this candle. Stretch indicator is showing that it is overbought for many days, and here jump thrust is more extended than SPY. For SPY, both of them were dark green, and here we can see one has become even more extended. The jump, the lower one is jump, the upper one is thrust. So QQQ has more reasons to be cautious about. It is very bullish, but it is also too extended for me to buy now. On the other hand, DIA and IWM were not so strong in recent weeks. And if I look at DIA now, DIA was in fact inside a triangle in both weekly and daily. And though this week closed strongly up, it is still remaining in the sideways range. Friday had a strong bullish day, but there is a trend line resistance nearby. It's a range in a range now, continuing to be in a range. Because it is range bound and it is approaching the upper edge of the range, I'm not going to buy DIA now. If you look back now, see the beauty of the Q signals. We had a cluster of indecisions at the low here, and in between we had a bullish headwind, the very unique reversal signal. And look back further, the bearish headwind, the unique reversal once again caught almost the very top here, and prior to that the bullish headwind caught almost the very bottom. Very unique and very useful reversal signal that sometimes also gives us a reversal trade setup. Once again, the bullish headwind alerted us that price could go up from this very low point, which indeed happened. The continuing to be inside a range, and IWM, the small cap ETF that was the weakest of the market ETFs, that has now broken out of the range. So DIA is still inside a sideways range created by trendline resistance support, but IWM has comfortably broken above the trendline resistances, and weekly is also looking very bullish. Weekly has a reversal candle as well. Daily has big move up 3, the extreme bullish momentum signal. You can say the father of all momentum signals. Very strong bullish momentum in IWM. So in the last couple of market recaps, I mentioned that growth stocks were starting to go up. We'll see what is the status this week, but growth stocks were starting to outperforming value stocks, but small caps were lagging. And I mentioned that I'm waiting for the small caps to start to outperform, and small caps, we don't know if it is okay. On Friday itself, certainly it outperformed. Why I'm saying that, if we look at the daily performance here, IWM went up by the biggest percentage on Friday, 3.6 percentage, much more than QQQ, which went up by 0.7%. Respectable percentage move in QQQ, but IWM was much stronger. IWM outperformed all the other market ETFs. So now maybe the time to look for small cap growth stocks. Is growth still outperforming? We'll soon find that out. But I am willing to buy small cap stocks now, looking at the beautiful breakout in daily with big move up 3 bullish momentum, and the weekly with a bullish backdrop color, bullish shape with bullish reversal. That is the external view. It's telling me to avoid buying large cap tech stocks and go for smaller cap stocks now. A change from the market state that we had in last several weeks. Now let's look at the internal health check, the very useful market breadth total view, a single chart view of what is going on inside the market. It is bullish. The candle chart is that of a custom index created from multiple, 6 in fact, composites and major indexes that is going up. However, I am still a bit concerned about the 3 Bango signals that came earlier. The Bango signal was created by Mr. Ian Woodward, may him rest in peace. They tend to come near the market top. If you look back, the previous time Bango came, market corrected quite a bit, and now we have 3 Bango signals, one after another. The way I interpret it is that buy everything, even those of not value. The last few traders are buying a lot of stocks. That is a concern. And another concern I have is looking at this market breadth, the internal view is that the accumulation count on Friday, only one. Looking at the huge market move across the board, on Friday I would expect a larger count, bigger accumulation count. But I am a bit surprised. I'm just looking at it now. That is also giving me some pause about buying the Bango signals, and now only one accumulation count on Friday. That is a bit surprising, isn't it? That is tempering my bullishness now. The percentage of stocks above 50-day moving average now just crossed above the midpoint, 50% level, and 3-month new high low just now crossed above the midpoint. It's not overbought. None of them are overbought, but still I am concerned about the Bango signals and surprisingly low accumulation count on Friday. Growth versus value, they were starting to go up for quite a few weeks, and that is continuing. Growth is outperforming value. And small cap versus large cap, on Friday they did all right, but overall, looking at the plot, we have to say it is not outperforming yet. It has to break out of this previous high before I can confidently start to buy small cap stocks. That has not happened yet. Just Friday is one day's performance. That is not enough to go and start buying small caps for me. So again, looking at the internal health check, I am going to wait for buying small caps. Maybe it will break out on Monday. Maybe the small cap versus large cap will break out of the previous peak on Monday, but I am not in a hurry. I may wait for that. A bullish picture indeed, but there is some concern. But certainly bullish picture. what about the sector industry stock breadth that we see in Q edge? If you remember, this was mostly red in the last market recap, if I remember correctly. And now, other than the 1 month period, where the sectors are still bearish, but even there, I see the industries and stocks. The advanced decline breadth has already turned bullish. And for the other longer term view, 10-day view, that is already bullish across the board, and certainly weekly view, 2-day view, 1-day view, bullish. But then I look at the green patches. 100% of sectors are up over 5 days, 2 days, 1 day. 94 to 99% of industries are up. 88 to 94% of stocks are up over 5 day, 2 day, 1 day period. Yes, it is bullish, but it's looking a bit too bullish to me. That is another concern now I have. I am carrying out this market analysis live. Though the external views were bullish, especially for small caps, QQQ was overbought, SPY was also extended. I had my first concern from the low accumulation count, and now from Q edge it is looking a bit too bullish over the 1 day, 2 day, 5 day periods. Maybe I will not mind waiting for a pullback before starting to buy stocks. It's too bullish. Is it overbought in terms of bucket analysis? No. The percentage of stocks in the uppermost bucket, that is above upper Bollinger Band, is around 20%. It becomes overbought when it goes to 30-40% level. So it's still some way to go, and it is bullish market now because majority of stocks, 73%, are above mid Bollinger Band. Bullish, not overbought. However, the sector industry stock breadth went up too rapidly, and I may wait for a pullback before buying new stocks. I may already have some long positions. I will continue to hold them with a trailing stop, but I may not buy new stocks. That is how I am reading the market level analysis as I go through global markets, then USA market external view, then USA market internal health check, and then sector industry stock breadth, then bucket analysis. We still have one more market level analysis to look at, that is technical breadth, and I'm using the latest version of QFinder that is ready for download and install, as I mentioned. The weekly picture is bullish. Again, 94% of all setups are bullish. 91% of strength setups are bullish. 97% of continuation setups are bullish, and even 95% of reversal setups are bullish. It's clearly bullish, but to me it's looking a bit too bullish. I may wait for a pause and maybe a pullback also before buying. So it's bullish, but it's a bit too bullish for my liking. That was the weekly technical breadth from QFinder. What about the daily technical breadth? Friday. That's also bullish across the board. In terms of technical breadth, I will rely more on the weekly picture to decide if it is becoming overbought. Daily is clearly bullish and weekly is showing it is overbought. That is a look at the market. It's bullish but overbought. I will like to prefer small caps, but again market is looking a bit too bullish for me. Having said that, because the market is so bullish, why not we look at, why don't we carry out a top down analysis? I will also like to look at the new finder, but let's start with top down analysis. Let's go to the sectors. I'm looking at the sector scorecard. What did I do? Okay, this latest Windows version has multiple desktops. I by mistake pressed a key combination on my keyboard to go to the next desktop, which was totally blank. Back to my webinar desktop. Now I am looking at the sector scorecard from 1 day to 1 month. During market hours, the real-time score is also calculated. And then I'm looking at the acceleration, deceleration, that space, 1 day, 2 day, 5 day period. Further to the right, I have the actual performance. Usually I just look at the scorecard. I may look at the strongest sectors in terms of strength or score, or I may look at the strongest sectors in terms of acceleration. Few interesting things I find from here. Remember, when I looked at QQQ, I mentioned that I was not willing to buy QQQ now, and that is now confirmed by the sector scorecard. Infotech sector, QQQ has many technology stocks, was the strongest sector for a long time. But now, suddenly it has become the worst performing sector. Yes, it is up, but relatively it is the worst performing sector now. And I can see even in terms of pace, it is the worst performing. So the view that I had looking at QQQ, that I may avoid buying QQQ now, that is further strengthened by the relative weakness, the weakest score, weakest pace of Infotech sector. On the other hand, materials and energy, they were weak earlier, and now they are the strongest two sectors. We may look to buy in these two sectors, or we may use the acceleration. The most accelerating sector is consumer staples. You can see the score is not among the strongest yet, but that is fine. We may choose the most accelerating sector 2 for buying. So let me do that. Let me choose consumer staples, most accelerating sector, and also materials and energy. Those are strongest in terms of strength. And let me drill down to the industries of only these three sectors, and again sort them by score. I would also like to drill down to my own stock universe from industry strength, and let's, for today's session, let me look at the mid-price stocks, mid-price liquid stocks. I can say I have 1 2 3 4, nice number, 1234 stocks in the mid-price liquid stocks in the USA market. So I'm generating a scorecard of that 1000 plus stocks. Cube Vital is, this is Cube Vital. Cube Vital is used to calculate fundamental scorecard. It is retrieving data from Refinitiv or Metastock Zenith, and once the retrieval is done, it will calculate the scorecard and show us overall how did these stocks do on Friday. Give it a few seconds. On Friday, 88% of these 1, 2, 3, 4 liquid mid-price stocks went up. That is very bullish. But I don't want to look at all the stocks in this mid-price liquid stocks list. I want to only look at the stocks that are in the strongest sectors, in the strongest industries. We already found the strongest sectors, and now I am looking at the industries in those sectors, and I'm highlighting only those industries that are among the top 20%. And now you can see this is the industry scorecard. Again, it has 1 day to 12 months score. During market hours, real-time score is calculated, and we have the pace over 1 to 5 days. The actual performance is shown further to the right. So I am highlighting only the industries. Which are these industries? These are the industries in the three strongest sectors: energy, materials in terms of strength, and consumer staples in terms of acceleration. And I'm highlighting the strongest industries in those sectors. And now I'm drilling down into the stocks from my liquid mid-price stocks that belong to only one of these industries. These are the stocks. Let's look at, because the market is so bullish, let's not look at one star stocks. One star green means I can, using a single click, look for stocks that are either undervalued or having earnings growth. But let me go one step further today as the starting point. 3 star, that is both undervalued and having earnings growth. I have 10 stocks, all went up, of course. They are undervalued with earnings growth. And I can see several of them are having funds accumulation. Why not I focus on only those? Again, a single click. So I am left with 8 stocks. What are these 8 stocks again? Let's step back. I looked at the market. Market is bullish. I looked at the strongest sectors, two in terms of strength, one in terms of acceleration: materials, energy, and consumer staples. I looked at the strongest industries in those sectors. Then I drilled down into my own trading universe. Not all NYSE, Nasdaq stocks, not all S&P 1500 stocks, but only liquid stocks. And in this case, I chose only liquid mid-price stocks. They tend to move more in terms of percentage when they starts to move. So I focused on liquid mid-price stocks. And I also quickly identified the stocks in that list that are undervalued with earnings growth with fund accumulation. Now I could open the charts, or we could look for Q Finder trade setups. So again, a single click using the new Q Finder, and I can see that out of those stocks, 5 stocks have at least one or more trade setups, and they happen to have at least one or more patterns as well. These are the patterns I was talking about. They are part of the latest release. They are in both Q Global as well as Q Elite. These stocks happen to have bullish patterns also. The top one, HP, has a price extreme low pattern and also a fan out pattern, bullish pattern. We are looking at the bullish tab. And these two stocks, PTEN and CVI, that is Patterson UTI and CVR Energy, they have the price extreme low pattern, fan out pattern, as well as squeeze move pattern. They all have one or more trade setups. Now, interestingly, these 3 stocks are all energy stocks. How to use the patterns? We use the trade setups to identify an entry point. These are the setups in full capital from bounce to gap. Gap setup is now a possible swing trade setup. Earlier in Finder, gaps used to identify intraday trade setups, but now the under the hood I mentioned in the latest release, there are several changes under the hood. So gap is now a swing trade setup, and all the other trade setups have also been fine-tuned. So the full capital headings, those are trade setups using unambiguous checklists. We always look for a trade setup before buying. And what are the patterns? The stocks give trade setups, and sometimes they maybe in a pattern also, and people tend to develop affinity towards one or more patterns. So many traders, successful well-known traders, they look for stocks moving out of a squeeze. That is a pattern that many people favor. I also favor that. I also like to buy at low prices, buy low, sell high, proven methodology, and I buy fundamentally strong stocks at low price points. So that is also a pattern many people like. And fan out is another pattern where multiple direction lines come together, they converge and diverge, a pattern people like. The last pattern is indecision pattern, where multiple bullish indecisions, in this case for long trades, bullish indecision cluster happens and then price starts to go up. So we always look for a trade setup, and if they have one of the patterns you are fond of, you may look for those. But in any case, the setups themselves are enough, but we may look for patterns if we like them. And I like price extreme low, I also like squeeze move, I also like fan out. So why don't we look at these two stocks first? See, now only I am going to open the charts. I know they are in strongest sectors in a bullish market, in strongest industries, with strong fundamentals, with fund accumulation. They are having attractive patterns and some trade setups. What are the trade setups? I can see that also here before opening the charts. They are both giving breakout trade setups. So now is the time to open the charts. While it is opening in Q Global, let's go to Q Finder interest session. If I drop the same two stocks, that is P10 and CVI, PTEN and CVI in Q Finder interest session, that is using radar, we can see the same setups and same patterns. Sometimes the data is little bit different. That's why the trend lines may be drawn little bit differently. So we look at both of them. We have the same trade setups and we have the same patterns: fan out, squeeze move, indecision cluster, and price extreme. The latest Q Elite has that pattern as well as trade setups. Let's go back to the charts. CVI, yes, it is giving a breakout setup with a bullish flow. In fact, it came to price extreme, it came to jump thrust low at price extreme low, and now today is the first day it gave a big move up 3. That is all good, but I am seeing there is another trend line resistance just up above Friday's close. So instead of buying this stock CVI on Friday, I may watch it on Monday, and if it can break out of this trend line resistance, I may buy with a stop buy order. Once again, the bullish headwind caught almost the very low. So far it is catching the low point. We'll see if CVI can go above the next trendline resistance, and one way to take the long trade will be to use a buy stop order. The stop can be just below the recent low. It's not a very wide stop. The other stock was PTEN. Again, that has broken out of one trend line resistance, but there is another resistance just above Friday's close. So once again, I will not buy it at the close on Friday. This stock is also beaten down, jump thrust low at price extreme low. If it breaks out of the trend line resistance on Monday, we may consider buying, but I would not buy any of them on Friday. So that was a top down analysis for several market recaps. I didn't carry out a top down analysis, I did that just now. Why don't I also do a bottom up analysis using the latest finder? Okay, let's go to the home, go to bullish setups. I'm going to look at all the stocks that have at least one or more bullish setup, at least one or more bullish pattern, and I see I have a lot of squeeze moves. 129. Why don't I flag only for that? Flag for them. So this is bottom up analysis. I'm looking at technicals first with some kind of trade setup plus some trading pattern, chart pattern, specifically having squeeze move pattern also. Now before opening them, I would like to make sure they are fundamentally strong one way or another. So using a single click, I'm sending these 129 stocks to Q Vital to retrieve their raw data from Zenith and then calculate a fundamental scorecard. Because YouTube streaming is running, plus I'm running so many programs, both Q Elite, Q Global, and other Q types programs, it is a bit slow. If I am not streaming for YouTube, it would work faster. Okay. Of these stocks, of course, all of them are up because they have a buy setup with bullish pattern on Friday. All these 129 stocks are, of course, up on Friday. Let's look at their fundamental scorecard. Again, let's look at stocks with at least 3 stars. So that is undervalued with earnings growth as well. They all went up with significant percentages. So now we are doing bottom up. They have technical setups, they have several chart patterns that people like. They all include squeeze move pattern. They are fundamentally strong, but I would not open the charts yet. I want to further filter the stocks that are in strong industries also. So a single click, I'm looking up their industry scorecard from Q Edge. I'm going to look at only the strongest industries, highlight them. I could also choose the strongly accelerating industry, that is specialized rates. Interesting, isn't it? Specialized rates, that is a real estate sector industry. We can see real estate sector. That was weak earlier. Defensive stocks industries were weak, but now it is strongest in terms of acceleration. So I highlighted the strongest industries, and now let's filter out, filter into stocks only in those industries. So I am left with 15 stocks. What are these stocks? I used bottom up analysis in this case. These stocks are having at least one or more Q long setup with at least one or more attractive chart patterns. They all include the squeeze move pattern. They are fundamentally strong in terms of both valuation as well as earnings growth, and they are among the top 20% of all industries on Friday, either in terms of strength or acceleration. Now I may look at their charts. So why don't I go to the finder setups again of these stocks. $15 stocks, and now I see many of them are having breakout setup. Actually, I may sort by number of setups now. Interestingly, Caterpillar comes to the top. It has three possible buy setup: gap long setup, breakout long setup, flow long setup. It has a squeeze move. Remember, we included only stocks that have squeeze move pattern. It also has a fan out pattern. Caterpillar may be part of Dow Jones Industrials. We saw Dow Jones Industrials and IWM both were lagging earlier, but now CAT is quite strong. In fact, very strong. Went up by 8.4% on Friday. Now is the time to look at the chart, isn't it? Let's do that. Interesting. It has a very strong breakout, bullish flow, possible flow trend following long setup, big move up 3, all good. However, it also closed just below the next trend line resistance. I'm not going to buy it at the close on Friday. If the trend line resistance was not there, this resistance is clearly broken, but if this resistance second one was not there, I could buy at the close on Friday, but I'll avoid doing that. Okay, so not Caterpillar. I'm seeing if any stock has a trade setup that we could take on Friday, and so far I have not seen any. I did top down as well as doing bottom up now. There may be other stocks. I'm focusing on the best of the best in terms of sector strength, industry strength, fundamental strength, technical strength. Let's look at, let me open a number of stocks together. The stocks with breakout as well as bullish flow. These 4 stocks. Okay, open them. This is looking good. ALSN, this has a clear breakout and there is no trend line resistance above the Friday's candle. So ALSN is a proper breakout setup, 360 degrees buy setup. I look at it using weekly daily. Let's scroll through the other few stocks. EPR broke out of one trend line resistance, but another one is not so far away. So let's skip that. We already found one clear breakout in ALSN. Next one, ONB, also has a trendline resistance nearby, though one is broken. Not going to buy it now. TEX, this also has a very clear breakout. No more trendline resistance nearby. Broke out of a sidewise range. So you remember all these are also squeeze move, breaking out of a squeezed chart pattern. So I am going to keep TEX. So I'm left with 2 stocks, ALSN and TEX. By the way, you could also find the same characteristics from Q Elite. So ALSN and TEX. In Q Elite also we can see from the Finder radar that they both gave breakout plus flow setups. They are both coming out of squeeze move pattern, and one is already at price extreme high. That's fine. Is coming out of a squeeze with a nice breakout for both of them. We could look at the charts on Q Elite also. ALSN, very nice clear breakout, and TEX, very nice breakout. Now let's let's look at them once more. This is TEX and ALSN. What I am going to do, I am going to look at them one after another using the weekly daily template, trying to choose one of the two. Now, CALSN, yes, it has a very nice breakout, could be traded on Friday at the close, but when you look at the weekly, it had bearish headwinds, series of them at this peak from which price retreated quite a lot. Now it broke above that watermark resistance. Yes, it is bullish, but if it goes down next week, Monday, little bit, it will create a false upside breakout. It's bullish, but it has this concern that it is nearing a double top in weekly where bearish headwinds came earlier that led to a price drop, large correction. Some selling may still be left at that. Headwinds, you may consider them as kind of hidden resistance, and now we also have a watermark resistance at that level. So that's one way to read the chart. That's way I am reading the chart using Q signals. And TEX on the other hand has no trendline resistance nearby. There is no watermark resistance also nearby, neither in daily nor in weekly. Instead, we have very nice weekly trendline support. So if I had to choose one stock on Friday for buying, I would have chosen TEX. It broke out from a squeeze with a gap up. By the way, if I go to Finder, we can also see that both of them had gap up open. The gap setup is not flagged because that has additional requirement. Not every gap up open is a gap long setup for swing trading. Remember, now the gap finder column is for swing trading more, not for intraday trading. So you may use the gap open for intraday gap trading, but for buying the stock as a gap setup at the end of the day, we need this column to be green. That was not flagged. However, we have breakout and flow. So going back to the chart again, TEX had a gap up open, then a breakout long setup with a bullish flow long setup also with a fantastic support in weekly. So technicals are looking very good. Now let's go back to its fundamentals. I have 1 minute or so. Let's look at its one page fundamental scorecard. We already know it is a 3-star buy candidate. I have 2 more minutes. Using that 2 more minutes. Now instead of calculating the scorecard of a number of stocks, I am doing a fundamental and PR analysis of a root stock using QVital. See how many different ways you may use the dive systems, that includes Vital Edge, etc. And it's beautiful, isn't it? The scorecard. Just a look at this one page scorecard tells it's looking beautiful in terms of fundamentals. Construction and heavy machinery industry. Beautiful. I love it. 27 PR stocks all were up on Friday. That is very strong industry in itself. Undervalued stock, great earnings quality, a short squeeze potential. Funds are accumulating. If you want to put weightage on analyst recommendations, they are bullish. High earnings growth. So 3-star we know undervalued plus high earnings growth. It has accelerating revenue growth as well, increasing revenue growth. We can see that from the graph also. Earnings growth went up, very high earnings growth in the last quarter. Pays a small dividend, makes money. So everything is looking good fundamentally. And we know it is one of the strongest industries. Let's check its industry scorecard again. Among the top 20% of all industries, if we want to see the industry strength over 1 day, 2 day, 5 day, we can see it is going up. On Friday, it went up by a significant percentage. So this is the peak of the day, if you want to call it. Nice breakout plus flow setup with weekly trend line support, breaking out of squeeze also. Great fundamentals, great industry strength. So market is bullish, though the QQQs or technology stocks or information technology stocks I may avoid buying now. There are other stocks that were languishing earlier in industries that were weaker earlier that are starting to go up, and you may find low risk buying points in those stocks like TEX. By the way, because TEX had a sizable gap, instead of putting stop below the daily trend line support, which will be far away, you may consider putting the stop below Friday's low, where I may stop out in this case if price closes inside the triangle again. Of course, the trend line resistance will be removed next week, but you can see this price range. Let's see the exact price. Let's say 48.3, 48.4. If it goes back to 48.234, then it will go inside that squeeze range again, and that may be the point to stop out of the long trade if you took it on Friday. I will not use a stop below the recent low in this case because that is a bit too far away for my liking. Well, that is all for this weekend. Again, bullish market, but one accumulation count is a bit surprising for me, and sector industry stock breadth a bit too bullish but a bit too bullish. Weekly finder technical breadth bullish but a bit too bullish. I'm concerned about that, but there are pockets in the market where you may find buy setups that are attractive like TEX. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. That will be next weekend most likely. I'll announce the date and time on Twitter as always. Have a great weekend, and as these live sessions and my Twitter posts and forum posts show, there is no reason not to do that. As I always say, trade profitably. If you are disciplined, have access to robust systems, and now in Q you have trade setups plus patterns, I think there is no reason not to make some money from the market, in any market in fact. I hope you do that, and thank you.